We have just a few minutes left in our trading day, so it's time for the big picture. We'll welcome in our team from Charles Schwab. Joining us today is Michelle Gibley, the Director of International Research at Charles Schwab. Michelle, always great to have you with us, and lots for us to talk about today. First, just your takeaways on some of the data that we've gotten here in the U.S. and how it relates to international data.
Yeah, the US and Europe are moving in different directions, and that's on economic growth, inflation, and monetary policy. The core CPI today for the US was 3.1% in August. If you compare the same number in the Eurozone, it was 2.3. The labor market in the US appears to be deteriorating, but in the Eurozone, ECB President Lagarde today said that the projection is for unemployment to continue to fall from a current record low to a new record low. And she also noted the resilience of the Eurozone economy. And you could look at the gains in the Eurozone manufacturing PMI. It really stands out as posting continued increases every month this year. It's up over 4 points year to date and back into expansion territory in August. And that's for the first time since June of 2022. So that's over 3 years. And then when asked today if the ECB rate cutting cycle was complete, Lagarde noted that inflation is right where they want it to be. It's on target. So she didn't push back on the idea that rate cuts were over. And markets are interpreting that as, the ECB might be done cutting rates.
And that's certainly a very different story from what we're dealing with here at home, as all we talk about is coming into the next meeting and how many cuts there will be going forward. I guess this begs to question, what are they doing differently, and are they doing something right that we aren't doing here at home?
I think it's just that they're in different cycles. The economy in the Eurozone was weak last year versus it was strong here in the U.S. And that allowed inflation to fall faster in the Eurozone, and the ECB to go at a faster pace for rate cuts. So we just, we're going starting at different points, and we're just in different points of the cycle right now.
And, we always see it reflected in the dollar whenever we get these prints. And we did see the dollar fall on the CPI data that came out this morning, as well as some of the jobs numbers that we got. And likely was some of that also related to this ECB policy and the potential that they may be done cutting?
Yeah, that's right. The dollar fell on the U.S. data, but it really picked up steam after that ECB press conference got underway. And, if we just look at monetary policy in isolation, if we have more rate cuts for the Fed relative to the rest of the world, particularly if the ECB is done, it's, the euro is 57% of the U.S. dollar index. That could keep downward pressure on the dollar. And that's actually a good thing if you're invested in international stocks. A weak dollar adds to returns.
And as far as international stock performance, we know that they've outperformed the U.S. market so far this year, but how significantly are they still outperforming?
Yeah, they're still outperforming by over 1,200 basis points this year. If we think about the first part of the year, the outperformance was due to the weakness in the U.S. tech trade, and the outperformance in Europe by the cyclicals there, like financials. Since then, performance in local currency has narrowed, and now most of the outperformance is due to currency. There is a risk that fiscal deficit concerns in places like France, UK, and Japan may hinder international outperformance, but the dollar is likely to weaken further, and that could continue to add to international stock returns, and investors are likely underweight international, and they may want to stay unhedged to kind of capture that currency benefit.
And as far as specific international markets, are there any that are standing out as top performers?
Chinese stocks are really standing out. They recently regained the levels not seen since a decade ago, and there's AI excitement in China. And that, started earlier this year with DeepSeek, but it's really continued. If we look at the internet leaders in China, they're accelerating their investment in AI and cloud computing. The three largest companies there are announcing what could be a 60% increase in spending this year. Now, I wouldn't say they're necessarily in a bubble yet. The MSCI China index is trading at 12.8 times. just above its 10-year average, but earnings are still being revised down, and so the gains are all coming from an expansion in valuation multiples. We're seeing new brokerage accounts being opened up, margin use on the rise, and so the government is worried about protecting against a bubble, and so they've started to step up warnings about instituting curbs on speculation.
Well, Michelle, we appreciate you taking the time to talk all things overseas with us. That's Michelle Gibley from Charles Schwab.